The Cruise CEO went on CNBC this morning, and let me tell you, after watching this video, I am more bullish and more excited on Tesla stock and specifically fully autonomous vehicles than I have ever been. The opportunity is massive. You really need to hear this. So we're going to play the clip and then we're going to talk about it and context this to why it's so important for Tesla stock, and you guys will get a lot of value out of it. But I also want to go over the economic data coming out tomorrow and how this could affect the markets, because we get personal spending, personal income, as well as PCE. PCE, personal consumption expenditures, is the Fed's preferred gauge of inflation.
In about 3 weeks since Cruise, the GM subsidiary that is developing autonomous vehicle ride-hailing in the San Francisco area, was allowed to expand and then had to cut back its service in the San Francisco area. Let's bring in Kyle Vogt, who is the founder and CEO of Cruise. Kyle, thanks for joining us this morning. We wanted to have you on to get some perspective in terms of where things stand right now in terms of Cruise's service in San Francisco.
Well, thanks for having me, Phil. It's been an exciting year for us, for sure, some ups and downs. But as you know, like, Cruise is out there. This is a brand new thing, robo-taxis on the streets of public roads. And when you drive almost 5 million miles like we have, you're going to see almost everything, including some very rare events. And so, when we see something novel, when our regulators see something novel, they're going to want to take a close look at it. We should all want that. And so we're working really closely with our regulators to give them the information they need about this and other things. But the really important thing people need to know about AVs is their safety track record, especially relative to human drivers. And since we've been operating, we've seen a 2/3 reduction in the type of collisions that could cause injury. And in the collisions we do see, 92% of them were caused by the human driver and not the AV. And so if you've got a family or kids, you're going to want them in these robo-taxis and not the alternatives.
And yet, Kyle, you live out there. You've heard the commentary. The head of the San Francisco Fire Department said you guys are not ready for prime time after one of your vehicles crashed into a fire truck. You've had your vehicles disabled in the middle of intersections. I mean, the public looks at that and they say these guys are not ready for a widespread expansion across the city.
Well, look, first of all, we love first responders. We work really closely with the fire department, police department, and others. It's really important that they're able to do their jobs. That said, I think it's really easy for us to get caught up in the excitement and novelty of AVs anytime they do something different than a human driver would. But if we create a double standard or start ignoring the fact that humans on average are actually not very good drivers and causing havoc on our roads, I think we run the risk of getting people hurt. And so, like I said, if you have robo-taxis out there that actually has a safety track record that's beating human drivers, and we start talking about pulling them off the road or restricting them, that's where we run the real risk of taking a step backwards in terms of road safety.
Kyle, within the last week, you guys announced that you're going to start testing your vehicles in Washington, D.C., also in the Seattle area. You recently expanded into Nashville. How do you make a decision in terms of what city that you want to start testing out? And when do you make the decision, okay, we think that we can go even further than just testing our vehicles in this city?
Yeah, so we're in 3 cities operating commercially now. We're testing in 11 more, and we'll go live commercial service on those in the not too distant future, and then 2 international cities. And so this is really the year when you see things going from an interesting pilot in maybe 1 or 2 cities into hundreds and then thousands of AVs across several cities operating commercially. And for us, what we're looking for when we go to a new city is we fully expect that that AV system is going to work really well, given that we've run commercially in several major cities already. But we do an extra round of testing and validation in that new market to make sure not only does the AV perform as expected, but we understand all the nuances and know how to interact with that community really well. We want to launch with communities in new cities and not at them.
Kyle, one last question here. CEO of General Motors, Mary Barra, has been effusive in her optimism about what the earnings potential is for Cruise. $50 billion in annual revenue, she believes, by 2030, $1 billion annually by 2025, and yet it's had no impact or very little impact at General Motors. I'm not asking you to answer for General Motors and their shareholders, but what is it going to take to get investors to realize, in your opinion, the potential, the earnings potential of autonomous ride-hailing?
Well, I think what you've described there is a sleeper hit. But if you look at what the AV industry, we haven't seen anything like this in the tech world or the business world in a long time. You've got a product that people absolutely love. When we launch robotaxis in a city, the demand far outstrips supply. People prefer it compared to a ride-hail vehicle, like hands down. The technology works. We've proven that it works in a handful of cities, and we've proven that we can scale it quickly to other cities. So you can see the business potential ramping up. And the cost structure is falling through the floor on the operating cost. And as we roll out new generations of vehicles, that means the cost per mile to serve customers in a ride-hail robotaxi service is dropping. So you have people love it, demand off the charts, cost structure falling through the floor. Those are all the ingredients to make a slam dunk, in my opinion.
So the first thing that I would like to point out is this was obviously Cruise CEO on CNBC. It was not Tesla. But a lot of people have a false conception of autonomous vehicles. There's going to be other players in this field. But right now, before it's everywhere, before there's robotaxis in every city, the first developers of autonomous vehicles, level 4 technologies that can actually operate robotaxis now, which would be Cruise and Waymo, well, you need to see them successful. Any setbacks for those two companies is negative for Tesla, and is not a good thing. So to hear Cruise expanding into more cities and testing in specifically 11 cities with commercial operation to come in 2024, 2025, that's great news. Because why? It makes it so when Tesla goes to get the same permits that Cruise and Waymo have today, it makes it a little bit easier. Being that first mover in a new field, especially when it comes to autonomous vehicles, is not an easy thing to get approval in a lot of cities. Now, obviously, there's testing that has to be done and all of that, and Tesla will have its time and its day, and Tesla will pass with flying colors when that day does come, in my personal opinion. But you don't want to see setbacks for Cruise or Waymo today, and it looks like you're seeing quite the opposite. Cruise is expanding into more cities. Now, I think a lot of people are confused, or not really confused, maybe I shouldn't say that, but kind of pessimistic towards Cruise and Waymo because they look at Cruise and Waymo as taking market share from Teslas. And I think the conception of this is wildly misunderstood because Tesla is currently mapping out all of these cities right now. So Cruise and Waymo, they have to go to different cities. They have to test their software. They have to map the city out. Tesla, once they are ready for robotaxis, which is probably later in 2024, you're going to see or be able to see a mass launch in many cities all at the same time. And let's be honest, riding in a Tesla compared to the Cruise vehicles is like driving in a Lambo compared to a Ford Escape, right? There's in terms of actual style and comfortability, there's really no comparison. Tesla is obviously the winner when it comes down to the vehicle itself that you're going to be driving in. But that's the main point, is Tesla is going to be able to launch basically everywhere all at once, where Cruise and Waymo will not have the ability to. So sure, Cruise and Waymo are ahead today, and things are going great, and I'm very glad that it is. But when Tesla's day comes, Tesla's scalability is going to be a lot faster. You're gonna blink, and within a couple of months, you're gonna start seeing Tesla robotaxis everywhere. That's the difference between Tesla, Cruise, and Waymo in the future. The second thing that really stands out to me that is very exciting is Cruise's and Waymo's success really forces Tesla to develop autonomous driving as fast as possible. And really what I mean by this is it's pretty straightforward. Competition has created the best technologies we have today. Your computer, your phone, your camera, it doesn't even matter what it is. Competition has created innovation, which has led to lower prices and better overall technology, a better way of living. So Cruise launching into more cities forces Tesla to develop autonomous vehicles literally as fast as possible. Tesla can't afford to wait over the past 5 years when Cruise and Waymo were kind of concept theories and maybe in a city or two. especially in San Francisco a couple of years ago. Well, Tesla didn't have to rush autonomous vehicles. They did not have to dedicate billions of dollars to train FSD or create a new, or buy, maybe not create, but buy a 10,000 H100 NVIDIA GPU cluster. They did not have to do that 5 years ago because there was not this degree of competition that we are seeing today. But look at what Tesla is doing now. They are reacting to this competition. Dojo, this NVIDIA cluster, $2 billion spent this year to train FSD and $2 billion plus next year to train FSD. That's great for you as a Tesla shareholder. This means autonomous vehicles and robotaxis might be coming a lot sooner than Wall Street expects. Wall Street doesn't even think Tesla will ever have robotaxis, so maybe faster than you think is the best way to put it. This is pure upside for Tesla stock and should be very exciting if you are a Tesla stock investor. Let's now go over the economic data that will be coming out tomorrow morning that will be very important. So first, we're going to start with the first catalyst or data point that is highlighted in red on Trading Economics. I'm not sponsored by Trading Economics. I wish I was, because I would be more than happy to talk about Trading Economics. But you guys need to use this in your own trading or investing if you're a little bit more active and you watch Catalyst and you watch data points and trade these, because Trading Economics is free. You can have it on your phone, you can have it on your computer, and it gives you the news and the data in real time. So if a data point comes out at 10:30, well, you're going to have that data report at 10:30. You're not going to have to watch it or read about it, somewhere else. Minutes later or hours later. So highly recommend you guys use this, tradingeconomics.com/calendar. Just look up Trading Economics calendar and you'll find it. But at 1:40, well, this is delayed an hour for me. So at 2:45 a.m. tonight, you're going to get the France inflation rate year over year. I don't expect this to be a big catalyst, but if inflation does rocket for whatever reason and it comes in way too high, that could be a problem. You're expecting 4.6%. Last month's reading was 4.3%. The euro inflation could be a little bit more important because that's incorporating the whole European region. And you're going to get that data at 5 o'clock in the morning tomorrow. And that is year over year estimates of 5.1%. Last month's reading was 5.3%. So overall, expecting inflation coming down for Europe. If you come in higher than 5.3%, you're going to have a problem. And Italy's inflation rate also comes out at 5 o'clock in the morning, expecting 5.3%. Last month's reading was 5.9% on a year-over-year basis. But that's not the important economic data coming out tomorrow. The important economic data coming out tomorrow is personal income month over month. That's the first one we have, and you're expecting 0.3%. Last month's reading was 0.3% as well. So at 0.3% annualized on a 12-month basis, that is 3.6%. It's a little high, but it's not too bad. If you get a couple 0.3% readings, couple 0.2% readings, a 0.1% reading in the course of 12 months, that's going to average out under 3%. That's okay. That's great. You want to see income outpacing inflation, but you don't want it to outpace inflation by too much. So if the Fed's target's 2%, 3.6%, wage growth or personal income growth, little too high, but not that bad. So personal income, as long as we come in at 0.3% and no higher, that's great. That would be great news. Personal spending month over month. This is interesting. So personal spending, you want to see come in good. Let me tell you why. Because the markets are more fearful, and they always will be, about a recession. So we were selling off in 2022 and had a terrible 2022 because why? It wasn't because inflation was high necessarily. It was because the Fed was raising rates, and that pushes the odds of a recession a lot higher, right? Pretty straightforward. So if personal spending comes in good, At the same time, inflation is falling, and which has been happening. That's your soft landing narrative. The only reason we are not in a recession today is because personal spending has been so well. Again, you're expecting 0.7%. Last month's reading was 0.5%. I do think there is a little bit of leeway here. If personal spending comes in at 0.5%, fine. That's great. Not a problem at all. If it comes in at 0.4%, great. That's fine. Not a problem at all. If you come in at 0.3% or lower, then markets are going to start fearing that recession a lot more based on that personal spending data. Now, the biggest data read that's going to come out tomorrow by far is core PCE price index month over month. The expectation is 0.2%. That would be 2.4% annualized. That's great. That is great news if we come out at 0.2%. Last month's reading was also 0.2%. This has basically been on a decline, so you want to continue to see this. If you come in at 0.3%, well, that's 3.6% annualized. That's a little high. If you come in at 0.4%, that's way too high. But odds are, my opinion, we could actually come in at 0.1%, and that would be 1.2% on a 12-month annualized basis for core PCE month over month. That would be the best news that we could hope for coming tomorrow. You don't necessarily want to see this negative because that's a sign of deflation. That's a sign of the economy is really slowing down. We're actually seeing people cutting prices. But 0.1%, 1.2% annualized is really that sweet spot of where you want to be. That would really push this disinflation narrative to the next level. And if at the same time we get good personal spending data and okay personal income data, that's your soft landing. That's a beautiful picture for tomorrow. Now, I actually think it's going to come out at 0.1%. So I'm actually expecting a pretty good day tomorrow. It wouldn't surprise me if the markets sell off on this news and the markets take this as the economy is slowing down. As we've seen today, the ADP employment change came in below expectations and revisions for GDP went down. So GDP was not as strong as we thought in the second quarter. So you are getting a little bit of concerns about that recession, at least today. And we'll see what happens with the data, but that will be important coming tomorrow as well. And that is the PCE specifically, as well as personal income and personal spending. Now, PCE price index year over year, you're expecting that to actually go higher at 3.3%. Last month's reading was 3%. So on your headline PCE, the year over year comps is really what's doing this. You're not necessarily seeing it increase in inflation, but it's the comps on the year over year basis. Now, PCE price index month over month, you're expecting that at 0.2% as well. I don't think the year over year is as important because obviously the comps are going to make it hard to show that we went down month over month, right? But your month over month readings on your headline and on your core, you're expecting 0.2%. If we get 0.2%, that's okay. But if we get 0.1% on any of these readings, it's probably going to be off to the races again for stocks. We are also going to get initial jobless claims for the week of August 26th. Now, we're expecting 235,000 initial jobless claims. Last month's reading, or last week's reading, was 230,000. Notice it's a last week reading. So this is more current. And if we are going to see a spike in unemployment, if we are going to see kind of the unemployment rate go higher, odds are we see the initial jobless claims going higher weeks beforehand. So this is more current data compared to even the jobs report that we are going to get on Friday. So this will also be very important coming tomorrow morning. And all of this data, personal income, personal spending, PCE, initial jobless claims, will be coming out at 8:30 in the morning tomorrow. So you're going to get a big data dump. Now, I should also mention core PCE price index year over year is expected to come in at 4.2%. Again, a little bit higher than last month's reading at 4.1% because of those base effects not working in our favor anymore. Over the past couple of months, your base effects have worked in our favor, and that is what has brought down headline so much, because when you annualize on a year over year basis, it looks a lot better, right? If inflation was way up here last year and now it's way down here, your year over year looks really good. Well, now not so much, as your year over year from last year is starting to fall over the next couple of months. It just makes it a little bit harder to actually comp that. So that's pretty much going to be all as far as major data. Tomorrow night, you're going to get the manufacturing PMI out of China, and that is at 9:45 p.m. So that could affect the markets a little bit heading into tomorrow, or not tomorrow, Friday's jobs report. So that is something to watch as well. As far as my overarching kind of view of the situation, inflation's probably going to fall. Personal income probably going to be low. Personal spending, that's a wild card, in my opinion. I don't think it's PCE. I don't think it's personal income. I think personal spending is the wild card, because I've personally seen the economy is slowing down. So if personal spending were to go, let's call it negative on a month-over-month basis, not at 0.7% positive, but maybe 1% negative, the markets will probably take that as, oh crap, consumer slowing down, recession. That's what actually could be the biggest mover of the markets tomorrow. So these are things to keep in mind. Now, obviously, with Tesla stock is seeing a decent day today. Not a super crazy up day, not a super down day. But I do think tomorrow and Friday have the potential to move Tesla and the broader markets quite a lot. And if you're in the downside camp, I don't think it's a little bit of downside. I think it would be a lot of downside. Same to the upside. If you're in the upside camp and you think the next couple of days are going to be really good, and I've heard people say September, seasonality, it tends to be negative, but some people are saying September is going to be a great month. If that's the case, it's probably going to be a really, really good month. So come to your own conclusions on all of this information. Again, I'm mixed, but I do expect a lot of volatility and big moves, whether it's to the upside or to the downside. So hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. If you guys want to come trade with me live in real time, link down below in the description of this video as well. We have a lot of great members over there that post their trades as well. We keep you up to date if there's any big news you need to know as well. We like to trade earnings, all of that, hedge out portfolios. So if the markets do fall over the next couple of days or weeks, we are fully prepared. We're going to make a lot of money on our hedges, and then what are we going to do? We're going to take that money from our hedges in the event the market does fall, take that money and put it back into Tesla stock at way lower prices, potentially. Thank you for watching. My name is Michael Tyler, and I will see you in the next one.